Welcome to the Q&A webcast of AAK's first virtual Capital Market Day, November 17, 2020. I'm Fredrik Nilsson, Chief Financial Officer at AAK. I will moderate today's sessions as well as answer any questions that you might have for me. We hope that you had a chance to review the pre-recorded presentations from selected members of our management team that was released in the morning on aak.com. We have set aside 60 minutes for this session. For today's Q&A, we have some panel members in the studio, while others has to join us online due to current travel restrictions. With me in the studio is Johan Westman, AAK's President and CEO.
Good afternoon, everyone.
Annemette Olesen, Chief Strategy and Sustainability Officer.
Good afternoon.
With us online are Sten Estrup, President Asia, joining us from Singapore.
Good afternoon.
Tim Stevenson, President Global and Sourcing and Trading, joining us from UK.
Good afternoon.
And finally, Niall Sands, President Plant-Based Food, joining us from Ireland.
Good afternoon.
We very much welcome your questions here today. Please submit your questions one at a time through the question box on the right side of the screen. Once it's your turn, please unmute your microphone. When you're done with your question, please mute again. If you want to ask another question, please submit a new question in the question box. The first question is coming from James Targett from Berenberg. Please unmute your microphone. Then we move on and come back to James here in a few seconds. The next question is coming from Heidi Vesterinen, Exane BNP Paribas. Please unmute your line, Heidi.
Hi, I hope this works.
Yes, it does.
I submitted 2 questions on M&A. First of all, in your presentation, you said that you have an ambition to become a more substantial player in adjacencies. What are some adjacencies of interest aside from lecithin, and how substantial do you mean when you say substantial? That's the first question.
Hi, Heidi. Thank you for that. And just to add to that, in our strategy, we have concluded that our main operating space is really within oils and fats, and then we're adding adjacencies to that. But it is really in that context. So it is other adjacencies where our total offering becomes better, or where the blending with oils and fats can make a superior product for our customers. That is how we go about it. So it's not a strategy or a target in itself to grow adjacencies, but we do think that is one of the opportunities we have to really leverage the total benefit of oils and fats for AAK. Anything to add to that, Fredrik?
No, I think you have a very good answer, Johan, on that question.
Right. So that's how we see it. So next to lecithin, it could be other adjacencies to blend in for special nutrition, for example, to really advance products that are in the market today.
Thank you. And then the second one, you had said that you are willing to go to 3 times leverage. I think it was in Fredrik's presentation. Do you have sizable targets that would require an equity raise?
Whether or not an equity raise is needed, we'll see. I'm confident that when we find the right targets, we will be able to do that. Yes, indeed, we could go to a leverage at about 3, and if equity is needed, then that is what we would go after. And yes, we have in our M&A pipeline many targets that we try to review, analyze, and also nurture and build relationships with. So there are not that many very big acquisitions, but many smaller to mid-size. But we do have a pipeline of both.
Thank you. I'll get back in the queue.
Okay, thank you, Heidi.
And the next question is coming from Per Jørgensen, INT Asset Management. Please open your line.
Yes, thank you. On sustainability and your targets, a question, are you ahead of peers with these new targets? That's my first question. And my second question in the same regard is, will the Nestle deal on palm oil be the first of many for you? And will it maybe discipline the industry more than we have seen until now?
Hi, Per, and let me start, and I'll hand it over to you, Anne-Mette. Our main focus, our priority is to make impact, to really drive towards an improved supply chain of all the supply chains that we work with, and certainly palm oil is one of the most important and complex ones. And that's how we drive ourselves. And given our purpose that we also launch now, it's all about how we can make better happen rather than necessarily benchmarking and competing, call it, on the impact with competitors. For us, it's our impact that is important. With regards to more comments on that, Anne-Mette, please.
If you look at it, I'm fully aligned with what Johan also says, that what we focus on is what adds value to our customers, because we believe that's the best guidance rather than necessarily benchmarking us. I do understand that might be where you are looking, but we are focusing a lot on where we can add value and set targets that are aiming to support us in that direction. And sorry, you had...
Okay, so it's fair. Is it then fair to assume that you will actually inform the investment community on a running basis how you are doing on the benchmarking towards 2025?
Yes, we will definitely be reporting progress. And you also asked into the cooperation with Nestle. This was pulled out as an example of how we also do customer co-development within the sustainability area. And this is more an ongoing partnership. So this is not something that's finished with a specific contract. It is the bar continuously raises on the expectations and the commitments within the sustainability area. So this is just an example of where we've teamed up very closely with Nestle on their specific requirement and to make that happen. So in general, we have a portfolio of customers where we are working with, you could say, with different requirements, but similarly trying to create the right solutions for them to both deliver on their promises and to support their brand.
And I think it's crucial to succeed that we cooperate to make real impact. We need to do this together with our customers, our complete supply chain, upstream, our suppliers, but also governments around the world, and at the end of the day, consumers. That is the way we can make real impact throughout the supply chain, and that is how we try to really also drive our impact. Thank you, Per.
Great, thanks.
Then let's make a new try with James Targett, Berenberg. Please open your line, James. Still seems like we have some problem with James' line. So let's move on to Alexander Jones, Bank of America. Please open your line.
Hi, good afternoon, everyone, and thanks for taking my question. On the plant-based space, if I may, could you talk a little bit about how you're seeing the segment evolve in terms of commodity oils and fats compared to specialties and kind of premiumization within that? And then linked to that, in the slides, it appears as though you're aiming for a significant increase in plant-based EBIT, maybe even more than 4 times higher by 2023. Is that a to scale illustration or just something showing the potential opportunity? Thank you.
Thank you. So I will, in a bit, hand it over to you, Niall, to get some color to this. Certainly, we do believe in plant-based food. That is, in the long term, we will, as consumers, eat more plant-based, have a more plant-based diet. That is something that we definitely believe in. And to get some color to that question, I'll hand it over directly to you, Niall. So please.
Thank you, Johan. Yes, to answer your question, in terms of the product development that's ongoing in the markets today, There is an absolute position for a high level of specialty oils and fats that deliver a very clear functional benefit to the product, be it in terms of the performance relative to the standard equivalent product, especially in plant-based meat. That's not to say that there is some commodity oils and fats out there. However, there is a race by some brand owners to get products into the market. And what we see is that they have been brought to market rather quickly, but maybe not with the best solution. So we are active in terms of reformulating with brand owners who have launched on improvement opportunities to put an even better product out in the market. So this approach of iterative prototyping and testing products in the market, rapidly improving, is a trait in terms of product development in this. And therefore, that gives us an opportunity to highlight and show the benefits of our specialty oils and fats, which gives an overall better performance. In terms of the graph, it's for illustrative purposes towards the end, but clearly it shows the drivers that we see, which will create us with a more profitable business unit going forward.
Thank you, Niall. And I think it's fair to say that in a segment, an industry that is growing so fast, the number of reformulations, new solutions will be high into this space. As it evolves, as it matures, and we get new food on the table, of course, this will be a mature industry where there will be opportunities for some commodity oils and fats, but certainly opportunity for highly specialized solutions for taste, flavor, and so forth. Thank you.
Great, thank you.
And the next question is coming from Kenneth Toll Johansson from Carnegie. Please open your line, Kenneth. Then we move on. I think James Target from Berenberg should be online now. So let's do a new try, James.
Hi, James.
Hello, can you hear me?
Yes, we can. Great.
Great. Okay, so yeah, I've got a few questions on sustainability, if I may. Firstly, could you talk about what percentage of your revenues currently come from sustainable solutions, and where where you're looking for that to go? And then secondly, I was interested why you didn't have the Sustainable Development Goal number 3, which is good health and well-being, as one of your sort of main goals to address, considering your portfolio of making products healthier and obviously plant-based as well. And then thirdly, with sustainability, are you considering integrating your ESG targets initiatives into executive compensation? Thank you.
Thank you. We will take your questions, and Anne-Mette, I will hand it over to you in a bit. To answer the first piece of this, our target is obviously to get our supply chains sustainable. So at the end of the day, that's what we are working towards. And it's more complex and call it difficult, or the hurdles are higher in some of our supply chains than others. Why we do not disclose exact percentages, it's because we work towards the impact we're making. We're working towards making these supply chains sustainable and taking those actions together with customers and suppliers, as I mentioned. But with regards to the more specific questions, Anne-Mette,
yes,
happy to let the word to you.
You asked about the measuring of the revenue and how big a part which is related to sustainable solution. The tricky part is what is the definition of sustainable solutions. So you could say corporate knights have one definition they call clean revenue, and you have many other definitions out there. Some lean more on revenue that is linked to the SDGs. So what we are actually looking at, we are measuring the different measurements, but we are trying to figure out which is the best measurements that can guide us to turn a bigger part of our revenue into being built upon sustainable solutions. But we are still figuring out what is the best driver or lighthouse to work with to drive our progress within this area. And I think you had a very fair question on why we're not focusing on sustainable development goal number 3, the health and nutritional part. And I think it's probably a little bit to do with that often when we think sustainability, we've been very focused on our supply chain, our operation. And often the solutions we've developed within health and nutrition, we often looked at that, that's a business need coming out from our customers. But I think it's a very fair point that we focus on and will definitely do a high contribution into this area. So a good point, maybe we need to recast our thinking on the importance and our contributions within this area. We definitely aim to scale that also going forward. And about setting targets for the future, when we know the measuring stick, we'll also know how to set targets going forward. But there's no doubt that we see an increasing part of our revenue and increasing part of our opportunity pipeline relating to requirements on sustainability. So we believe it's a strong business driver and strong business opportunity for us for the future.
And with regards to our compensation, it's an annual dialogue between myself, the leadership team of AAK, as well as the board of directors, and at the end of the day, the remuneration committee. So that is certainly something that we evaluate, and but also sustainability is built into our complete business model, and it is of crucial essence. So it is indirectly impacting everything that we do and every compensation KPI, but certainly we are discussing also specific sustainability ones. All right.
Thank you. The next question is coming from Philip Mettler, ZKB. Please open your line. Then we are moving on and coming back to you, Philip. The next question is coming from Per Jørgensen, INT Asset Management. Please open your line.
Hi again, Per.
Yes, thank you. Hi again. A question on food service that has been an issue this year, estimated around 15% of food ingredients, if I'm correct. Could you comment a bit about the right sizing you have done in the food service and also the comment about plant-based opportunity that I'd heard Niall, he talked about? And do you see it actually as a growing category again, if you put it all together in the food service?
Yes, thank you. So food service, as we all know, were hit hard. It's due to that we, at the end of the day, deliver through restaurants, hotel chains, airline catering, and so forth. And with the restrictions we've seen, that has had a dramatic impact on our customers' volumes, and with that, our volumes. We were very quick to act in that, so our team in food service did a great job in adapting to the new situation. And we have restructured that organization to a leaner, lower cost base, lower cost to serve. And from that base, we are now growing or following the market. We saw a pickup from Q2 into Q3, but we also see restrictions being tighter again around the world. So let's see. There is still a high degree of uncertainty, while in the mid to long term, we do expect that to come back. And there is a certain portion of food service that is linked to plant-based food, because also within plant-based food, some of our customers obviously sell through restaurants versus retail. And that part that goes through restaurants has been impacted as well on plant-based food. But from the low base in Q2 or May, call it April, May, we have seen a sequential pickup. But again, uncertainty is high given what happens now over the next months and quarters with regards to COVID-19.
Okay, thanks.
Thank you.
And the next question is coming from Alexander Jones, Bank of America. Please open your line.
Great, thank you for the opportunity for another question, this time on the Chinese capacity that's starting up next year. Could you just give us an idea of what capabilities to drive organic growth this will give you compared to what you have currently, and how long you expect it to take to ramp up that new facility? Thank you.
Yes, if we start with the latter part, the ramping up will be starting early next year, and we should be up and running well towards the second half or the later part of next year. With regards to what it's giving us, it really gives us more capacity. So it is a capacity step up that we could use globally, but certainly China is the end consumer market for a large portion of what we are already producing and selling today. So with this, we also get local presence, regional presence in one of the most important markets for infant formula. So it's a very nice add-on that we're getting, capacity and in the right market.
Great, thanks.
Then coming back to you, Philip Mettler at ZKB. Your line is now open for your question.
While we are waiting for that, I might just add one thing to pair your question of food service. One other part we have been doing, apart from right sizing in food service, is also that we are trying to leverage the capacity that we have and the production lines that we have to see if some of what we're selling, for example, in airline catering, like small portion bottles and so forth, can go through retail or restaurants instead of airline catering. So also trying to kind of shift the business model a bit to adapt to the current situation and make the best out of it.
Okay, but it's fair to assume that, is it fair to assume that the main part of the food service capacity is mainly food service? You can't use it in other categories. That's correct understood?
That's correct understood, because our volume business is about refining oils and fats, and this is about blending sauces and bottled products directly used in restaurants or airline catering and so forth. So it's a different business model.
Yeah, okay, thanks.
We have one more question from James Target at Berenberg. Please open your line, James.
Hello again. Thank you for taking my follow-up. It's just on M&A. You know, one of the sort of the pillars of your M&A strategy was adjacent kind of ingredient products. So I just wondered if you could talk about where you see which categories you see of most interest to you, and where you could perhaps leverage your portfolio and footprint the most.
Yeah. So we're certainly targeting, and this is where we see the opportunity. Lecithin as a good example, it is very tightly linked to chocolate and confectionery fats. So that is one adjacency linked to that industry, but it can be used in many others as well. And as we see invest for growth in chocolate and confectionery, in special nutrition, and our focus on both plant-based food and the whole health and nutritional space where we are trying to build a platform, in those areas, that's where we really look for adjacencies that can play a role for nutrition, for health, and then leverage that through the industries where we are present, be that into chocolate, be that into infant formulas, be that into baked goods, and that's how we see that. So it's certainly looking at ingredients that can play a role in the markets where we see the best opportunities.
Okay, thank you.
Further questions?
Let's do a new try with Kenneth Toll Johansson from Carnegie. Please open your line, Kenneth. Still seems like we have some issues with your line, Kenneth, so let's move on. And the next question is coming from Heidi Vesterinen from Exane BNP Paribas. Please open your line, Heidi.
Hi again. I have a few questions on plant-based. So you announced a new center of excellence in Europe. What will this center bring that you didn't have before? And is this similar to the setup that you announced in the US? I think it was a year or so ago. And the second question on plant-based, when you work on the mouthfeel of a product, you need other ingredients like flavors to combine with the fats, and together it creates the juiciness, etc. So do you work with other ingredients players?
Thank you, Heidi, and I'll hand it over to you, Niall, in a heartbeat. Just to comment on what are we trying to achieve. We know oils and fats. This is a new industry. What we are building now is to building the capability and the strength like we have in chocolate and confectionery fat. Some of you have been with us on our Capital Market Day that we held in Aarhus in Denmark and entered into our CI center and met our colleagues that help you get a picture on how we work with chocolate and confectionery customers to really improve their products. That is the knowledge base that we are now trying to achieve in plant-based food. And with regards to the further questions, Niall, please take it over from there.
Yes, so to answer the first question with regards to the Centre of Excellence we've announced in the Netherlands, the centre we have in San Francisco is a fantastic asset to have and supports us with our activities in that region from a customer innovation perspective. But the Centre of Excellence in the Netherlands is where we've essentially upped our game with respect to customer infrastructure. And again, in terms of pushing forward how we engage with customers under the umbrella of Customer Development 2.0. So with that, we will have a more complete facility to engage with customers where we can mock up prototypes of products, where we can put them through sensory testing, either internally with customers or with their focus groups that can come into this facility. And then ultimately we can replicate the cooking experience, whether that's the at-home cooking experience or whether that would be as a product may be used within the food service channel. So all under one roof, we will be able to really step up our ability to offer a more complete service in terms of new product development. So it's quite broad in that essence. With regards to partnerships, you may also have noticed that we have announced a strategic partnership in California last week. That again is very much linked to the collaboration that we see as necessary in plant-based foods, as you allude to, that there is other essential ingredients that contribute to the overall taste and sensory experience. And therefore we are actively collaborating with our peers who have specialist ingredient knowledge in order to do a better job for our customers. So it's a win-win for everyone.
Thank you, Noel.
Thank you.
We have one more question from Per Jørgensen, INT Asset Management. Please open your line, Per.
Yes, thank you. Regarding this management ambition of plus 10% EBIT per year CAGR, it's no secret that 2020 will be a bit challenged in that respect. If I listen to you guys today and hear about the ambitions on special products and China and India and food ingredients restructuring and so on, is it fair to assume that we can include the 2020 in the calculation? So it's actually from 2019 until 2022 that your ambition is to grow plus 10%? Or is it going too far?
Thank you, Per, and we usually have these kind of conversations, so certainly happy to answer it. Well, our ambition, and it is a company ambition of growing our operating profit by 10% year over year. It is an ambition over time. It is an ambition that stands longer than here and now. As you said, yes, who knew that COVID-19 would hit us? Of course, that's a kind of a significant bump on the road. And whether or not we can include it, our ambition is to really have achieved that as an average over years. But is it possible to deliver that over a period 19 to 2022? Is it 19 to 23, or is it from 21 and forward? Let's see. But our strive is certainly to get back to a high growth number as soon as possible. But as we all know, COVID is still here. It's still a high level of uncertainty in Q4, in Q1, in Q2, and then let's see. But we have also shown that we can react, and we are to a large degree resilient. But now we're speaking about the specific target on growing 10%, and of course that's a bold target. And we need to deliver both on volume growth, on our ambition in high value-added solutions with higher margins, as well as getting our M&A pipeline to deliver into concrete M&A. So it is a combination of all that will give us this. So a bit of uncertainty still, Per, but certainly we are striving for it.
Fair enough question answer. Thank you.
Thank you, Per.
If you have further questions, please submit them in the question box in the right corner on your screen. I will continue with the question from Philip Mettler from ZKB. Please open your line, Philip. It seems like it will not work, so I will read Philip's question. In order to reach your sustainability sourcing targets by 2025, what actions are necessary to take in your supply chain?
Thank you. And Tim, I'll hand it over to you in a bit. So we're certainly stepping up. AAK has been for many, many years making impact in the supply chains where we operate. And specifically to the palm oil supply chain, we are members, co-founding members of RSPO. We are driving and stepping up with regards to making impact. In order to succeed, it is crucial that we do that together with supplier development, commitments, monitoring, but we need to take it quite far in order to succeed. And Tim, please add to that.
Thanks, Johan. That's absolutely right. I think collaboration within the industry is absolutely key to those targets. If we take this deforestation target for 2025, clearly we can measure that by satellite monitoring. But if we're going to have an impact, given our position in the supply chain as well, then we have to work with others, including, in particular, our tier one suppliers, and working through them towards the upstream side. So as well as the RSPO, which Johan has already mentioned, we are participating in other cross-industry organizations like the Palm Oil Collaboration Group, which deals with more palm oil which is not certified by the RSPO, which is the RSPO being effectively the gold standard. So we have to work with them in order to achieve it clearly, because the targets are not those which are directly within our control. They tend to be more upstream. Certainly deforestation is not something which occurs on our sites. It's upstream with suppliers. And the same with other key areas like human rights, which are less obvious more difficult to monitor through the satellite monitoring systems, and we have to work with others in order to do that. That's absolutely key, and it applies to customers as well as NGOs. So we're developing more relationships with international NGOs as we go forward, and the sort of initiatives which Anna Mette outlined on her presentation relating to satellite monitoring, relating to smallholder development as well, which is absolutely key, are going to be absolutely fundamental to achieving those goals. And they are quite ambitious goals, but we are committed to getting there, and they will make a difference in terms of sustainability generally, and particularly probably the most difficult area, and certainly the most high-profile area of palm oil.
And just to add on that, and this is also a delicate balance where we're really trying to make impact across the whole. Because to achieve this, of course, we are looking at how to reduce number of suppliers, how to work with more strategic partners upstream. That in itself will improve traceability to plantation and so forth. But we also care a lot about smallholders and making the livelihoods of many better. So it is that delicate balance of doing the right thing long term and having an impact long term versus certain KPIs and perceptions around the world with stakeholders, consumers, and so forth. And that's really where we try hard to strike the right balance. All right.
And our next question is coming from Janne Kujala from Evli Fund. Please open your line, Janne.
Hi.
Hi.
Can you add a bit more color on setting the science-based climate targets? When do you think you can come out with these? And I'd be curious to hear your thinking on the ambition level.
Thank you. I'll hand that one right over to you, Anna Mette. Thank you.
Thank you. Thank you for the question. what we've used the last year, as I also shared in my presentation, to align to the greenhouse gas protocol, because as you know, that's the foundation to be able to set the targets. And then we've actually done an assessment both within, if you look at our assessment of where our footprint on greenhouse gases comes from, a heavy part of that comes from our supply chain. So we've actually worked with our sourcing and trading organization on making sure that we can commit to the ambitious targets within the science-based target. And we've also worked with our whole global operation organization assessing, where are we tracking, what would be the key next steps, and so on. So we believe that we will be able to sign off on a more detailed plan beginning of next year. But we will definitely already, before entering next year, sign up to committing to sign for the targets, and then we'll more making the detailed plans in the beginning of next year. I don't know if that covers your question.
Thank you, Anne-Mette.
Yeah, that's what I was interested in basically the timeline when we get to hear more. Thanks.
Thank you.
You're welcome.
And our next question is coming from Victoria Lidén at Öhman. Please open your line, Victoria.
Thank you. And I basically had the same question as Janne here before me, so I think my question was answered. But just to add to that, in terms of science-based targets, is it safe to assume that these will be in line with the 2-degree scenario?
We're actually looking at the 1.5-degree target. That's what we are assessing ourselves against. So, but we want to do the final detailed work before we come out with a more formal. But this is what we've been assessing ourselves against.
Okay, thank you very much.
Thank you.
The next question is coming from Kari Rinta at Handelsbanken Capital Markets Day. You have a very strong balance sheet and you want to be proactive with M&A. What is the main bottleneck? Lack of targets, limited management resources / time, COVID-19, or something else?
Thank you. Thank you, Kari, through Frederick. I would say from a call it what is challenging a bit, it's certainly not the ambition as such. We have the capacity. It is that there is a mixed bag of opportunities out there, and I mentioned that a little bit in a question before, and obviously I cannot be specific on our pipeline. But it is a pipeline within oils and fats, or call it our colleagues around the world, is a mixed bag of, or call it small, rather small to mid-sized companies, very local, and then quite some larger companies. So the larger acquisition, the call it more game changer acquisitions that we're looking at, those are not that many, and many things need to fall in place in order to make them happen. With regards to bolt-on acquisitions, we have continued to do that, and we will continue to make them happen. We have a pipeline. It's a bit about getting the analysis and the relationship building to move on. And specifically to COVID, we have felt that we can nurture our pipeline. It is quite easy to get contact, to get a virtual meeting going. Most of the world, we're now used to a quick meeting over a certain platform, have a virtual meeting. So that is not the issue. But of course, following through with an acquisition, the targets that come out and then getting through a due diligence, being able to get to a facility. For us, it's most often a production plant or several production plants within a company where we need to do due diligence and look at the assets and get a bit of a touch and feel around it. And that is, of course, more difficult with COVID all around. But certainly we are managing our pipeline and we are nurturing our relationship. So that ambition stands, but it is not, call it enough opportunities out there to just cherry pick and make them happen overnight. It takes relationship building. It takes time for some of them to materialize, but certainly we have opportunities out there.
If you have further questions, please submit them in the question box. Then we will continue and see if we can get Kenneth from Carnegie on the line. Please open your line, Kenneth. Seems like we still have an issue with Kenneth's line, so let's move on with Alexander Jones, Bank of America.
Great, thank you. One more from my side would be on the kind of competitive landscape of ingredients overall. Do you worry at all about the ability to compete as a kind of smaller independent player as the larger players, the Givaudan's, the IFFs of this world, kind of also expand into adjacencies and talk about offering solutions offerings? Is that a concern, or do you think that doesn't really impact your ability to drive growth? Thank you.
Thank you. Great question. I think for myself, I think I speak for many, we should always look at movements and development to one degree as a concern, meaning that we force ourselves to really look at what we're doing and how competitive we are, but also look at them, and that's how we really strive in AAK. What is the opportunity in the change in the industry? And yes, we have chosen to be staying at oils and fats with adjacencies. We do not have the strategic ambition to be a one-stop shop for many ingredients. And that is partly because that space is taken by very successful and strong companies. We like to see those companies as potential partners. Some of them are partners to us today. For example, in special nutrition, we have partnered up with companies to develop solutions and deliver really strong value-adding products into infant formula, for example. We talked about plant-based food just now, also an area where collaboration will be key going forward. So we are certainly looking at what partners do we need to leverage our strength? Where can we team up in order to get a better solution to, at the end of the day, end consumers? But that specific example you mentioned just now, we don't see as a concern rather than an opportunity. Then, of course, in the broader landscape, yes, we are one of the most specialized players. Some of our competitors in the oils and fat space are vertically integrated and much larger than AAK, but we have also focused to be a player in the high-end value-adding oils and fats, and that's the niche where we want to operate, and that's what we're known for. So we're trying to really build on our strength also going forward. But one should be humble. Every change could be a risk, but also certainly an opportunity.
Thank you.
And the next question is coming from Heidi Vesterinen, Exane BNP Paribas. Please open your line, Heidi.
Hi again. A few questions on CCF, please. Could you share what you are seeing in the market at the moment? We saw IRI data suggesting a very positive trend ahead of Christmas. Do you see this as well? And could you also update us on recent innovations such as Cobao, please? Thank you.
Thank you, Heidi. I'll start off and then I'll hand it over to you, Fredrik, for the latter part. We certainly saw in Q3 a sequential pickup, and you saw that in our numbers, strong numbers for CCF on the back of the improvements we have made already in our supply chain over the last 2 years. So more capacity, more efficient production setup, as well as better yielding kernels. That impacts our cost to serve. And then on top of that, getting volumes back after the quite weak Q2 as COVID hit in the middle of the Easter season and so forth. So confirming that trend as you spoke about it for Q3, not commenting exactly the trending at the moment, but yes, there's been a pickup sequentially and certainly targeting Halloween, Christmas. But there is the uncertainty again. How will Christmas evolve in terms of how will we as the world population consume chocolate and confectionery over Christmas, next year's Easter? That will of course drive our demand. So there's a big uncertainty out there, and I think it's a given to every one of us. That's what it is. But certainly the trend was good in Q3. And then with regard to the latter part of the question, I hand it to you, Fredrik.
Thank you, Johan. Regarding Cobao, there is a great interest from customers, and we are right now doing quite a lot of co-development with different customers, but it's still a little bit too early to talk about the future potential, Heidi. But as far as we can see, there's been a very positive feedback from customers so far, but it's still in the development phase.
Thank you. And while I have this line open, more general question, have you seen any changes in the competitive landscape given the pandemic? Q2 was clearly challenging, and I wondered if smaller competitors might have struggled more than you have.
I would say that we haven't seen a dramatic change, not in our competitive landscape with regards to the broader spectrum of oils and fats. There's been, call it nuances with regards to performance. Obviously, if we go into our business area or segment, food service, yes, there we see differences, mainly at our customers, but certainly within more niche players. But that is also a smaller part of AAK and a more of a niche part of AAK. So I wouldn't say that in general the competitive landscape is that much different. Anything to add to that, Fredrik?
No, nothing to add here.
All right, thank you. Thank you.
Let's then do a final try with Kenneth. Please open your line, Kenneth.
Do we have you online, Kenneth? Or otherwise, write your question, perhaps.
As we have no further questions, I hand it over to you, Johan.
Thank you. And let me just check with the control room if we have a line open or if we should just round it up. All right. Then, first of all, I'd like to thank each and every one of the colleagues with me today, Niall, Sten, Tim, Fredrik, and Annemette. Thank you so much for joining me here in this live webcast, also for presentations and so forth leading up to this. And of course, to our whole team around us that has made this virtual meeting, the virtual webcast happening. It is an unprecedented situation. That's what it is, and this is a new way of doing a Capital Market Day for us. And with that, I would also like to thank every stakeholder, investor and other stakeholders that have listened to our presentations, that have been part of this webcast, and thank you for your question. Always like to get them and have a good dialogue with you. So I wish you all a very good rest of the day and see you next year, hopefully in a physical meeting, but who knows? And we're all learning, so maybe there will be a combination of the two. Let's see going forward. Thank you very much. Bye-bye.